Still the same Zoom issues. I think I won't be having any more problems with that. I'm just integrating my own Zoom again instead of using the Teams Zoom. All right, so as we usually do, we want to start out taking a look at what happened around the world, make sure there's nothing that would give us grief on the day. We're looking at big picture situations, right? Like the example that I use would be like a ship stuck in a canal, right? That I really think that's one of the greatest examples I've been able to bring up lately. That one, I mean, it stuck around for a few days. It was on everybody's radar at that point. That's the scope and the depth of the kind of news that we're looking for in the mornings. We want to see what happened around the world, get an idea of any sort of contagion or bleed over into today's trading session, right? And so finance juice is a good one for this. I like it because, well, one, it's free. Two, and it has a list of the speakers. Now, this is in my time zone, so it's not matching, the Eastern time. If you were using this, then of course it would be recognizing your time zone, not mine. So just want to point that out there. I do recommend starting an account with these guys. It doesn't cost you anything, but if you create an account, then you can go in and change the sources of the news, because it has a lot of sources in there, like maybe things you don't want, MSNBC and things like that. They do a market wrap, which I find useful in the morning. We want to get an idea what happened over in Asia. And if you scroll down far enough, there'll be an Asian market wrap. Now it's 12:45 in London, so the European wrap isn't really a done deal for the day, but it's a great place to start. We want to see what sectors moved around in Asia, what was dominant, what wasn't. This is just a really good way to start your day. All right. And for those of you who are new and maybe haven't seen this stream before, the idea is to get you ready for your trading day, teach you how to do these steps for yourself so you don't catch my stream in the morning. Simple enough. So we just go through the same steps every day, again and again and again, right? Repetition hopefully will get you to the point where you're thinking about how to do these steps on your own, perhaps design your own style of a morning briefing. And then I've taught you to fish instead of giving you a fish every day. So it's all non-farm payroll and labor. We do have a rig count today, but after working on those rigs for 20 years, I can pretty much tell you it's not going to have a great impact on anything. That doesn't mean that we want to completely ignore it. Just recognize that it's very likely not going to have any impact. So 8:30, 10 o'clock, 1 o'clock, 3 o'clock. And then we have those additional speakers today. The Williams and Villeroy. There were 5 main economic events for July on the books, and today was one of those days, right? So just be ready to go. As with every day, we can only do one of 3 things: maintain our sideways disposition, break to the upside, break to the downside. The overnight range is fairly muted. Not much of a surprise. We could just maintain this range. And remember, when we're talking about range, it really is all of yesterday that we're talking about here. But we'll start and break this down into quadrants. Our own Globex low to yesterday's high, that would be part of that range. And then perhaps from yesterday's low to yesterday's RTH open, or even the Globex high of yesterday, that would be a part of that same range, right? Because we're looking at all of yesterday from the highest point to the lowest point, from Globex, RTH, the whole kit and caboodle. But if you were to draw a box from, say, 39.14 all the way down to 38.30, and that's a massive range. And I don't find that to be very useful, right? So instead of having the entire range like that, break it down into sections or quadrants, and then trade from level to level. It's also worth marking out your institutional pivot points, which include the open of yesterday at the RTH, the open of yesterday at the Globex, you could do something like the 5-minute open, carry that one forward. But I'd say we got quite a number of pivots already. We don't really need any more. This week we've been kind of wrapped up sitting in this range. We finally got out of the range. But like I mentioned the other day, we're still in this greater range. So 39.46-ish. That's the real deal to the upside. We're going to really struggle to get past that. And the idea is, well, can we even get to it? Is it something that we even need to worry about today? It lines up with a 1 ADR, so, or what I call the ADR half. So we could easily get there. A full ADR for today is going to put us at 4,000. I'm giving it 5 points, but it's close enough. So we could easily get to the top of that range and break out today, but it would absolutely need to be based on some news, right? We're already 12 hours into the day. We don't have much time left. If we're going to make a move like that, we would need this thing to really get into gear. Yesterday was such a bifurcated market. It was tech without finance backing it up for the large part of the day, right? Without that highly correlated coefficient, we just couldn't get the oomph that we needed. So the base case is clear. And other than the economic news that we have this morning, that's really, I mean, that's a wrap for the week. 39.14, 38.32. That's the base case argument, and that we just dance from pivot to pivot through this range. And the market would consider it good enough because we had multiple days this week in a row that were green, and we haven't had that since March. They're already talking about what a great week it was. So we only need to hold the line for the day, and they'll be talking it up on all the major news channels today as a great week for the market. Really kind of keep that in mind, right? Also keep in mind who's going to want to start new positions or carry positions into the weekend. And the flow yesterday, I mean, it was certainly positive. You want to just keep your eye on that today, see if we're going to continue to get that carryover. And there's a lot of great markets that are set up for trades. We'll get to those in a few minutes. So if we don't hold the range and we get that break to the upside, we're going to be looking at 39.46 for half the ADR, 4,000 for a full ADR for a topside move. But what if it's not a good morning? What if the econ is bad, Then we'll dance through these pivot points down to 38.32, and we'll start focusing on the full ADR to the downside. We'll call it 3,800 flat. And it's pretty close to that, so it'll do. Now, remember, as I've talked about before, if you are looking at the ADR, and that's a normal day, right? That's not even extreme. That's the distance we've been moving on a day-to-day basis. And so if you want to calculate what extreme would look like, you want to take that number and boost it by about 50%. So, take 2.5, divide that in half, you get 1.25. Take that 1.25, add it to the 2.5, 3.75. From that 3.75, we got a market maker move today in the ES. So now you're looking at 4.5%. That this market could very easily make a 4.5% move, even with this small amount of time that we have left. So if you want to gauge out what extreme looks like, 4.5% today. Considering we're flat, that's a pretty impressive number. And it wouldn't be too far. That's the craziest part of the whole thing. It wouldn't be too much. All right, we're looking at the daily chart. We are still within the weekly expected move, which is kind of nice because we haven't been ending inside the expected move for a while. We'll call it 39.27. Look at the scope and the size of next week's range. It's already started to plot. That thing is going to move up and down through the day until the end of the day, and at the close, it will lock into place and it won't move again, right? We call this one a static expected move. One thing that I always do on Fridays is I measure the size of that box and I compare it to last week's box and just ask a basic question. Are they pricing in more or less volatility? Is the expected move getting bigger or smaller? Now, as I said, it's not locked into place yet. So you want to do this at the end of the day. I'm just showing you now because I'm not going to come back and do a stream at the end of the day. So after the close, once the market has been locked, you want to draw a box around that and just compare it to the previous week. It looks like it's smaller, so they're not pricing in as much. But there is a difference between a 4-day week and a 5-day week. So you got to kind of keep that in mind too, right? The week that we're in right now was priced with only 4 days, and next week's is priced with 5 days. So then you got to kind of ask the question, are they really pricing in more, or is it just that 5th day? As you can see, we're still a long ways away from the cyan line. That's an anchored VWAP. It is anchored to the start of the year. It's not a surprise, right? And then we can see those multiple days to the upside. But we've still got significant resistance. And there is still more analysts saying that we would see 3,400 before you will see 4,500. Right? And trying to gauge which is going to come first. There's still a lot of downside to this. We do have, say, at least one higher low, and we're working on getting a higher high. But significant resistance at 39.56. Just keep your eye on that one. It's the institutional pivot point. Next thing worth asking is, how far away from the 10-period moving average are we? Have we gone too far too fast? Because we made some pretty decent moves this week. Reversion to the mean, think about like a basketball court or a football field, and everything starts in the middle and then you move, one side or the other. We just crossed through center court the other day. and we started an expansion above the 10-period moving average. We're at about a little more than 1% above the 10. Well, each market has their own average. Where do they kind of top out? What is too far before it pauses or reverses and moves back towards that 10? For the ES, that's around 2%. We hit some extremes this year. We've gone 3 and 3.5. We haven't quite hit a 4 year to date. But when we start getting around 1.5 to 2%, we're starting to hit the edges of what an upside move gives us before we stall out. Now, downside moves are a different story, but we're not even going to focus on that at this point this morning. We're mainly just asking the question, in the last few days, have we moved too far, too fast? And the answer is no. There's still a little bit of room left, but we're getting into the end of this swing, right? And when we talk about these swings, linear regression is a really nice thing to plot, right? You want to do it consistently, the same time, the same way, all the time. When you measure out these swings, you're trying to get a gauge for where the next swing is. Well, when we came up and stalled here, that was a little bit of a surprise, right? Because we had been getting really nice swings, almost in parity, right? Say you get a 2% move on one side, then you end up getting a 2% move on the other side. Then you'd get a 1% move on one side and a 1% move on the other, parity. But we stalled out on that last swing, and we didn't set the same level that we had been setting. Just like back here, we had stalled out from a swing high to a swing low. We were supposed to get a reasonably decent swing high, and we stalled. I point out this right here, this stall, and then this run right there, because here's the same stall and here is the same run. We very likely could, between now and next week, right before earnings season kicks off with those banks on the 14th, we could make it to 4,100. Now, I'm not saying we're going to do this, right? I'm just saying it's lining up that way. Either way, keeping track of the swing high and the swing low really helps you kind of gauge where are we at, right? Because nobody wants to short the hole and have it come back against us. Nobody wants to buy the highs and have it come back against us. We start asking that question, what's more likely when we've already extended ourselves way beyond the mean and we're on the upper edges of a swing high? What's more likely to happen at that point? That we're going to go higher, or that we're going to stall there and let the market catch up, and or reverse from there and head back towards center court? This helps you kind of plan out your trading day. And it doesn't mean that you're always going to be right, but that quote, what's more likely, or what's more likely, kind of fits into when what should happen doesn't. So that when you are focused on something like this and we're sitting at the extremes and it continues to go farther and make it even more extreme, then we start getting into when what should happen isn't happening, and we can deal with it accordingly, right? That we're getting extraordinary circumstances. That was a beautiful short back here, by the way, right? Because it just got so overextended beyond that linear regression line. One thing to keep in mind is we are right at the line. We're very, very close to center. And when you're close to center, you can see a market go either direction. It doesn't owe us a topside swing. There's been plenty of examples through the year where we got our downside swing and we stalled out at the line to get another downside swing. So don't think that it owes us like a pendulum clock going all the way across the swing. It doesn't owe us a crossover to each side. It can very likely stall out and come right back down again. The main thing that we want to focus on is when we are very far extended past the line. What's our expectation that we're going to continue to move in the same direction before coming back, right? Ten-day, 30-minute chart. We are outside of the volume profile. We have a lot of volume over our head between the COG line at 39.11 and our current location. There's just a lot of volume resistance there, right? It basically is our own Globex high or the high of yesterday. It lines up perfectly with all of this volume right there. We are well outside the box, and when we're outside the box, we anticipate going back to the box. If we were at the bottom of the box, we would expect to move to the top. And if we were at the top of the box, we would expect to move to the bottom. So when we're outside of the box, our expectation is that we're going to go back into the box. We don't have to though, right? It doesn't have to do that. It could just maintain for the day. And again, when what should happen doesn't. If this continues to expand farther away from the box, which it can do, right? Price can do whatever it wants. We would just recognize that, hey, this is doing something it shouldn't be doing, or that it's going to catch a lot of people off sides, which is where we get some of those greatest moves, right? When everybody thinks it's going to do one thing and it does something else, and we catch them off sides and get those traders trapped and squeezed, get those phenomenal moves, right? So just kind of focus on having the base case scenario. And then if that doesn't happen, then you're recognizing a when what should happen doesn't situation. We can carry forward yesterday's value area low. Right now we're looking at a 5-day, 5-minute chart. We call this mapping out the 5x5. If you were to carry forward yesterday's value area low and perhaps the value area high, argument could be made that we've already touched it, that it's no longer a virgin value area. But since we didn't cross through it, we could still argue that it's an untouched POC or an untouched value area. So we got the value area high and low of yesterday. We have a significant level of volume that almost became the point of control at 38.93. That'd be worth marking out. And then, of course, a lot of people carry forward the point of control. It's no longer an untouched point of control. We've touched it, we tagged it, we tickled it, made it all the way through it, crisscrossed it in both directions. So it's no longer a virgin point of control, but it is still yesterday's point of control. And when you're learning volume profile, what you'll learn in your studies is they'll tell you to carry forward these lines, right? And I don't mind carrying forward the point of control necessarily. I just don't normally bring the value area high and low, because typically I've already got enough pivot points. I don't need any more. And they generally line up with something that I would already be using anyways, right? Like say the high of Wednesday. They're not perfect, but they're pretty close. All right, we had some pretty extreme moves yesterday. And even this morning, well, after the assassination last night in Japan, right, we had that sharp liquidation. And then the euro dollar, we almost got parity. I mean, we almost, wink and a nod. We were so close to parity this morning. And then it came back up off of it. You see, we had some reasonably decent expansion in Bitcoin. And again, remember, we don't look at Bitcoin as a correlated or an uncorrelated market. We're not making that argument. We're not making that judgment. Bitcoin is just pure speculation, 100% absolute risk. And when we see them bidding into that, it's risk on, right? It's the most basic, simple form of risk on that you could see in a global narrative. So it's just as simple as that, right? Oil got back above 100, which was really great to see. Had that nice wedge breakout to the upside. Tangled up around 104.5 and came back to VWAP. Just want to keep our eye on it today. Kind of a benchmark at the moment. We want to see it holding above that 100 line. Very expansive move in the dollar. The overnight hours, we actually got up to very close to 108. As we've been saying, seeing the dollar above 105 is bearish for the S&P and the NASDAQ. But we're well above the 105. If you didn't get into the dollar, yeah, you're kind of a bit late. I wouldn't try to get it now. And the VIX is continuing to be absolutely worthless, which is messing with our skew levels and everything else. You look at the VVIX and see how unvolatile the volatility index is. It's not really being a useful and helpful product. And there was a significant move in gold. I could get rid of the euro. We had that move down Wednesday, and we've just been kind of maintaining these lows. And remember, the longer we stay sideways like this, we're just winding up more and more and more and more energy, looking for that break in the move. All right, so I talked about we didn't have a lot of the signals that we would have wanted to see yesterday. If you look at the cumulative tick, the NASDAQ continued to expand and the NYSE continued to expand, but that Russell was just letting us down. And for anybody who's not used to this indicator, usually it's a Russell crossover and an expansion away from the group that gives us that heads up of that market sentiment. So when the Russell broke away and was just going sideways, it really left me sitting here thinking, all right, well, this is not going to play out well, right? That it was going to be a head fake at any time. That Russell was just not doing what it normally would do. The market breadth as well, it wasn't necessarily negative, but it did get weak for a significant period of time. And a lot of it had to do with the financials. Look at KRE yesterday. It wasn't expanding, it wasn't participating, it wasn't helpful. If you need one of the three sectors, you need technology, finance, consumer discretionary, preferably tech or finance, right? Well, you certainly didn't have finance, and it's not the first time. On Wednesday, also, we didn't get it until really late in the day, and then it finally got off the bench and helped us out, and we had that late day rally Wednesday. Well, Thursday, it never really got into the game at all. Sure, it was gapped up from where it closed. It set a high early in the morning, but after that, we didn't get any help out of the financials yesterday, and that was a large part of that choppy, nasty, disjointed market that we had. On the other hand, when you look at technology and the MOT, the monsters of tech, that's where we really got our assistance. That was where our boost came from, right? And this yellow and white chart down here, this is a collection. This is the monsters of tech. Apple, Amazon, they're all wrapped up into this one market symbol. And that was our driving force yesterday. So when you look at things like tick, trend, AD, UVol, DVol, market breadth, we were in an uncorrelated market state, right? We were in a divergent market state. Oh, come on, Thinkorswim. There it goes. Looking at the weighted AD yesterday, this thing did not let us down, right? This and the monsters of tech absolutely were a great signal yesterday that everything was 5 by 5 and just keep on running. We got back above the zero line and the weighted and unweighted both. This is a sector reading. We had weighted and unweighted sectors. Everything went into bull mode and it just kept expanding and expanding and expanding. So, really nice signal in the weighted AD and in the MOT. Looking at the tick yesterday, you can see how we maintained this back and forth nature. It was like every 20 minutes or so, we were dropping below the line and then we were crisscrossing back and forth. So we were getting a lot of nasty signals or false signals or signals of weakness. There are days where these tools just don't do a very good job, right? And yesterday was one of them. So I had a few people reach out and say, that everything that we were looking at kept telling them to short that market, and they weren't wrong. It's what I was seeing, that it was all weak, that it was going to continue to fail to expand, and yet we kept expanding. All right, so let's talk about what we got on the agenda for today. We do have a couple of good names. Start with the monsters of tech. It's usually a really great place to start. Go out year to date, take a look, say at Apple. We had that really nice TRB, trend line breakover, Wednesday into Thursday. Look at that, beautiful. And there was a little bit of worry that yesterday was going to be a breakout fake out, right? That 143.42 was going to be the thing that knocked this market down because we had tagged into it on Tuesday, or excuse me, Wednesday. We had hit it and failed to maintain that break above it. So on Thursday, when we gapped above it, there was an argument that was, we weren't going to be able to keep it. We did keep it. Now that old resistance is our new support. We really don't want to see Apple get back below 143.42. And the next level of resistance is going to be 149.87. You might as well just call it 150. Nice and easy, right? So you're looking at about a $4 move, except that it's been moving around in the pre-market, right? So Thinkorswim doesn't show intraday movement before 9:30 a.m. on a daily chart. So what I like to do is just set the chart to a really high time frame, but still not quote a daily time frame. So we can see Apple's at 145.7, even though it closed at 146.35. That doesn't seem right, does it? I think that 146 might have been the after hours. Oh no, it's good. So 150, it's going to be our line in the sand. We've had 4 days in a row after that nice reversal down here. And you got to start thinking about the same old argument, linear regression, dot plot statistics. Have we moved too far? Reversion to the mean, all of that kind of argument, right? But make no mistake about it, Apple has the capacity to move way farther than you ever thought that it could and just keep on going, right? So if you're going to try to bet against this thing, give yourself some room. One thing that you can use to gauge that would be volatility. If the implied volatility begins to go up, even though this market is going up, that would be a warning that investors think it's gone too far. So you could just, add implied vol. And at the moment, at least, it's not moving up. That's what we would expect, right? When a market goes up, implied vol generally goes down. But there's plenty of times where the implied vol starts to go up, even though the market is going up with it. And that's usually a warning. All right, so that's Apple. A nice rejection at the 150, it would be my ballpark. All right, we got Microsoft. We just might get a higher high this week, right? We've been getting these lower highs, lower highs, lower highs. We just might get a higher high. Certainly after setting that base, we've got a higher low. We need a full set, right? We need a full set that's a higher high and a higher low, 2 of each, before we can start to call any sort of reversal. We're still underneath the year-to-date VWAP, still underneath the major moving averages. For Microsoft, we got a significant level of resistance, and we're there, right? We want to see it get above that level. It tried yesterday, wicked above it, couldn't hold it, dropped back down. So we're going to be looking for a continuation play on that. Remember, all of these are prime for where we're going to dump, right? Because at some point we're going to roll back over. So 270.55 would be like the last hurrah. You could mark yesterday's high and perhaps focus on that, 269.06. If we fail to get above that, then I would take that. Amazon still printing lower highs, equal lows. This thing is winding up more and more and more and more. The compression is building. It doesn't promise a direction, just a lot of energy. All right, so we're going to be looking for this thing to make an explosive move. We had that nice breakover Wednesday into Thursday. And right now we've got our resistance. Call it 118. Nice simple number, right? If we happen to get above 118 and we can hold it as a new support level, then we'll focus on this last higher high around the 125. I would be really concerned and looking for a rejection here, right? There has been an argument that we're going to get a rally all the way up until the banks next week. I don't know what to think of that argument, but it is valid. One of the bank's analysts came out with that one. Tesla continuing to print lower highs. We are starting to get some higher lows, so we're getting into a compression here. Overhead resistance 750. Excuse me, 756. If we can make it through 756, then we'll focus on 800. Yeah, 792, close to 8. Again, keep track of where we're at in the pre-market. Still going to be that level of rejection. All right, looking at the sectors this morning, semiconductors are down, Bitcoin sector is down. The rest of these are not at least 0.5%. So we got a whole lot that we would consider flat. And then on the upside, we've got energy and energy, right? USO and XOP. So we need a whole lot of movement on any of those sectors and get out of flat. Dollar is still making an extreme move. It's moved 75 cents since the peak that it set about 3 hours ago. And that move yesterday in the 30-year bonds was pretty phenomenal too. So like we've been doing, we want to look at sectors that perhaps aren't highly correlated with the rest of the market, right? That way, every name that we just went through, all those monsters of tech, you're basically just trading SPY with a different beta, right? And so if you're trying to diversify by going into different products, you're really not diversifying at all. You're still trading SPY really at the end of the day. So you want to find something other than that. When we talk about diversification, it's not just, well, I want to go up in some names and down in some names, or that I want to get into different sectors. It's also, how about things that absolutely are just not tied to the S&P? Say like crypto or the pot stocks or energy, bonds, commodities. Focus on those, right? So that 11 legacy sectors of the S&P really doesn't do crypto justice. This crypto list comes from the Futures Smalls Exchange. We opened up that index and took all the names out of it and built the watch list out of it for our sector. So we're looking at names like NVIDIA and AMD and PayPal and Square. All of these are down or flat. And the very few names that are up are more coin related. Yeah, blockchain ETF and BITQ is Bitwise crypto. So those are up individually. But a lot of the names that make up the crypto futures product, they're down. That makes for a good target. If we do continue to expand to the upside, these names that are down would be a nice flip play to the upside. I'd rather trade something that's advancing off of the lows than something that's already up 5% and thinking it's going to go up higher than that. All right, EV market. One name in the green, a few that are flat, and the rest are all red, right? Including a lot of our legacy names like GM, Ford, but some of the newer names too, NIO, Liato, XBev. So no help out of that one. And again, if we turn bullish today, the things that are down the most are going to be the things that I would want to focus on. And then the pot stocks. Most of this year has been, for me, on the intraday trading, energy and finance, energy and finance, energy and finance. It's very likely not going to change today. But I like to give some ideas of where you could look. It is my day to stream. I'll be doing a stock and options channel. Start around 9 or so. Probably going to start the discussion of UOA again, right? This is something we've brought up before for those of you who like to trade unusual options activity. We're trying to bring in some of the bots that were taken out a while back. Things like Trading Tick bot is going to be back again. I know that one was really popular within the community. You really got to kind of try to think about the idea that you can get an unlimited yearly license to the bullish bears and have access to Trading Tick, which is a product that would cost, I'm not quite sure on the cost, but I think it's $50 or $75 a month to use Trading Tick. You get to use it once you're in the Bullish Bears Discord. So it's like you get a free license to Trading Tick. That's just one of the bots that we're bringing back in, though. We're working on getting others, and should have a webinar coming up. I got to watch the schedule because we've got a number of webinars coming up, but we're going to be doing a webinar on a new UOA product. It's new to me. It's not new. It's been around. It's just new to me. There's so many UOA products, and when I find unique ones, that's what really gets my attention. And this one, it's unique. I like how user friendly it is. So I'm wanting to do a webinar on that. I just have to be careful on the timing. So I can't give you a date on the webinar yet because I don't want to give a date that overlaps something that Jeremy is putting together or something like that. So no date yet. The affiliate link for it should be on the Bullish Bears website, say by the end of the week. I don't want to rush Angel. She does that stuff and she has her own life to deal with too. But we're going to be bringing over a webinar on Whale Stream. That's the UOA that we're going to be focusing on. For the 9 o'clock stream, I don't normally bring it over to YouTube. I normally just do it right in our own community. So if you're looking for that, what you need to do is join the Bullish Bears and then join our Discord. This is the Discord, and I'll be streaming in stocks and options. Uh, Wednesday and 30, I was streaming in the futures. So like Mondays, I'm in stock and options. Wednesdays and Thursdays, I'm in the futures. Fridays, I'm back in stock and options. Yeah, I think the subscription really pays for itself. We're more education based than trade alert based. We do trade and we do call out our trades. We also focus on teaching trades, right? Which I think is more valuable than just giving somebody a fish. Um, the bots, especially that trading tick bot, that darn thing is expensive. You know, and I've had people tell me when we had it before, it was because one of our moderators bought it for himself and integrated it into our platform. Everybody loved it. When he left, he took it with him because it was his. And we had people that said, "Well, I only signed up because you guys had trading ticks. Now you don't have it, and I don't want to be here anymore." We're bringing it back in. We just had to get it for ourselves and get it integrated. Um, should be integrated by Monday, knock on wood. I'm not the one bringing in the bot, so I don't know. I did get the whale stream link going. So the unusual options, you don't have to request anything from this channel. It'll just post whenever there is an update. But some of these other ones, you have to know what the code is, right? You have to give it a command. We're going to be doing a video on this explaining how to use these, how to put in the commands, what you can request from the bots. These are really powerful tools that can shortcut your way to a trade, right? Instead of fumbling around with watch lists, old school ways of running scanners and hitting the servers and waiting for it to ping and what. Welcome to the new world, right? Where you run a command and the bot reaches out and gets what you need and hands it to you and you're ready to go. Got a lot of things in the works. We are tentatively scheduling 3 webinars at this point for the month. And that's just on my end. I know that Lucian's got one with Al Brooks coming up. I don't know what date or time, but that's in the works too. And then Jeremy is putting together some webinars. So we're looking at a very busy month, which is kind of cool, right? Because we want to find out what's out there that we can use to make our lives easier and help us find trades. Finding something to trade is a huge part of my day, right? I know what to do with it once I get it. I just got to get my hands on something worth trading. And that's where I think a lot of us spend time, right? Looking for the next trade. Where do you have a plan? We just need to find it. And so, when we can bring in more tools or better tools or get rid of a lot of tools that we don't need and we can sharpen up our focus, that helps. So, all right, everybody, I'll see you at around 9:15 in the stock and options channel.